Greetings everyone, glad to have you here watching this video. My name is RKrivo and today we're going to do something a little different. Today's session is entitled Dissecting a Trade, Multiple Time Frame Analysis and Donchian Channels. And rather than looking for setups going forward as we usually do, I thought it might be instructive to look backward. That is, what I'm going to do is take a look at some of the trades I'm already in to show you why I entered them and see how we got to the place that we are in the trade currently. I found that sometimes reverse engineering can be very enlightening. Now, the three pairs we're going to take a look at are the dollar Canadian, the New Zealand Canadian, and the CAD yen. But before we get into specifics, let's take a look at the risk disclaimers and get those out of the way. Always important. I'll let you read through that yourself. Just be forewarned that currency trading, there's definitely a large element of risk involved, and be aware of that. Also, if you want to know in more detail how and why I set up my charts the way I do, check out the May 11th video on this channel. And if you have any questions about what we're going over here today or are interested in personal mentoring, feel free to email me at RKrivoFX@gmail.com. Okay, as of the market close last Friday, December 18th, here's where we stood on these trades. Hopefully you can see this, and it's not too blurry as I've enlarged it a bit, but you can see the dollar Canadian trade, the dollar CAD. We've been in exactly 1 month since November 20th. That's up 643 pips. The New Zealand CAD trade we've been in since December the 9th. That one's up 310 pips. And the CAD yen is the newest one of the bunch. We've been in that one since 12/18, December 18th, and we're up 52 pips on that one. Now the dollar Canadian, you can see I've closed out about half the position because I wanted to lock in profit as that pair has been trending for quite some time. So a total on these three right now, we're up about a little over 1,000 pips. Okay, so let's take a look at the charts on these pairs. Let's start off with the dollar Canadian because that's the one we've been in the longest. As I mentioned, we're using multiple time frame analysis here. We're looking at a single currency pair through 4 different time frames: the weekly, the daily, the 4-hour, and the 1-hour. And for those of you who have followed along before, and if you haven't seen how I drill down the charts before, you might want to look at some of those other drilling down the charts videos that are on the channel. But what we can see here is on the weekly chart, the pair has continued to make higher highs and higher lows. And this green arrow right here is where I entered the trade initially. And this was the week of November the 14th. And we can see price action has moved up quite a bit since then. The red line on each of the charts right there is showing you where my trailing stop is located at that time. At the current time, I manually trail the stops. So knowing that in the weekly, the pair is in an uptrend, higher highs and higher lows, continually taking out the upper Donchian channel. And also we have on the daily chart, same thing. The pair has been making higher highs, higher lows, and continually taking out that upper Donchian channel. And on the weekly chart, on the daily chart, this green arrow again represents where I got into the trade. I got into the trade the week of November 14th, and I got in the trade on November the 20th, as we can see here. So what I do when I see on the longer time frame charts, the weekly and the daily, I see the pair moving higher and higher, higher highs, higher lows, uptrend, that type of thing. What I'm looking for then is a place that I can enter on a lower time frame chart. And if memory serves, on this particular trade, I entered on a 1-hour chart. So that's the 1-hour chart. I'm going back to where that green arrow is, and there it's right there. This is where I entered the trade. Let's expand this a little bit. That's where I entered the trade on, as we said, November the 20th. Now, those of you who follow and know true Donchian strategy, you might be wondering why I got in at this point, because ideally in an uptrend, we want price action to take out the lower channel and then not enter until it takes out the upper channel, until price takes out the upper. What I did here, and you might be able to see this, I entered on this candle, and why I did that was this wick right here. Beyond that, moving up, there are all red candles and there's no resistance on the way up. So I kind of took a flyer. It's a little bit of a riskier trade to do it that way, but as it happened in this situation, it worked out. So I entered long on this candle, and based on true Donchian strategy, I put my stop below the lower Donchian channel. And then we just continued, let's see. Lost that green, there we go, the green arrow here. And then my stop started out at this point below the lower Donchian channel, and I trailed it up. Now, I don't keep it really tight against that bottom Donchian channel because I want to allow a little, a little wiggle room in there. So it's maybe 10 pips, 15 pips below that lower channel. Because you see, if I kept it tight, hard against that lower channel, I would have been stopped out there. I could have re-entered again, but I keep it right around, like I say, maybe 10, 15 pips below. So then I trail it up. And as you can see, as price continued to move higher, all I did was trail the stop up. And right now, price action is, let's see, at 139.58. My stop is just below the lower Donchian channel. But I got into the trade at a much lower price. I got in back here at 133.15. So right now, the trade is up, as we mentioned. Well, the stop is there, but the trade is up about 600 and some odd pips right at that point. So no matter what happens on this particular trade, if price action drops like a rock and I get stopped out right there, I'm still in positive territory because where I first entered the trade was down at 133.13. My stop is at 137.24. So if I did get stopped out, I'd get stopped out with about a profit of a little over 400 pips. And as this trade continues to move forward, it may continue to move higher. The lower Donchian channel line is going to continue to move higher as well as this trade, if this trade moves forward and moves higher. And then what I would do would just be trail the stop up. And that would be how I would manage this particular trade going forward. Trade management, how to manage a trade after you are in the trade, is a key part, obviously, of locking in profit and learning how to trade successfully, taking profits when they are there, but leaving room for price action to mature and move forward, and not just taking a few pips at a time. Let those stronger trends kick in so that you're able to capitalize on the trends by letting the pips move, letting price action move in your favor, thereby accruing more pips for your account. Is this the way it's going to work all the time? Absolutely not. But when you catch a long trend and you're in a trade for an extended period of time, that can forgive a lot of the smaller losses that you'll have. Okay, let's take a look at the New Zealand Canadian dollar trade. And we'll see here again, price action touched the lower Donchian channel on the weekly. Price is moving higher and higher, higher highs, higher lows. We got into the trade at the green arrow. We got into the trade the week of December the 5th. And we can see on the daily chart, price action again, higher highs, higher lows, no question about it. Go down to the 4-hour chart. We've got a similar situation, higher highs, higher lows. And if we go to the 1-hour chart, we can see here that price action just oscillated in this range for a while. It didn't touch the lower Donchian channel. Yeah, broke the rule a little bit here, but it got pretty close, and there was a nice consolidation in here for a period of time, and then it took out that upper channel. So once it broke that upper channel, that was my entry, and then I put my stop below the lower Donchian channel, and then just continued to trail it up. Here's my entry, and the entry was right there at 90.69, roughly. The stop right now, which got trailed up, I will move this stop up in a bit. But right now, if I would get stopped out, Hang on one second here. There it is. If I would get stopped out, I would be stopped out for a profit of about 155 pips. So we want to see price continue to move higher, and hopefully you can see why I entered that trade as I did and where I entered as I did. Now, some people might say, and rightfully so, well, gosh, you could have gotten in. This pair has been moving higher and higher. You got in there. Why didn't you get in back here? I like to see a trade kind of price action confirm itself a little bit more. I don't want to get in on the first pip or the first 10 pips necessarily of a trade, maybe even the first 50 pips of a trade, maybe even the first 100 pips of a trade. I'd rather enter a trade late and be right than enter early and be wrong. So I don't mind leaving some pips on the table. I don't have to get the first part of a move. I don't have to get the absolute last part of the move. I don't need the absolute first pip. I don't need the absolute last. As a trading friend of mine used to say, I just want to get that fat part out of the middle of a move, and that'll be fine with me. Okay, let's take a look at what was the last one we had. That was the CAD yen, I believe. And yes, that was it. Okay, so the CAD yen moving in the opposite direction, because you might have seen one of the commonalities in these three trades is they all have the Canadian dollar in them. And the Canadian dollar has been very weak lately. The price of oil has been very low. Canada, I believe, is right around the 7th largest producer of oil in the world. So the strength or the weakness of the Canadian dollar is dramatically tied to oil, which is a huge part of the Canadian economy. So Canadian dollar moving down, Canadian dollar weakness. So we've got lower highs, lower lows on the weekly chart, angle and separation on slow stochastics, moving down. So like we said, we just entered this trade on December the 18th, and price is moving down. And we see moving down on the 4-hour chart. Let's enhance the 1-hour chart here so we can see where we entered. Price action moved up, touched the upper channel, came close to touching the upper channel, took out the lower channel right there, had a pullback, and then as it moved back into the direction of the longer term trend, I got in at the point where it took out the previous low. I didn't get in here. I could have, but I waited until it took out the lowest low. And again, you see, it took it out and then a pretty strong retracement. And now it's positioned to maybe, we don't know for sure, continue moving lower. So we're going to see how that happens. My stop on this particular trade is not beyond break even yet. My stop is above the upper Donchian channel, and my entry, the stop was right here at 89.17 roughly, and the entry was down here at 87.37. So on this one, if price turns for whatever reason and hits my stop, I'm going to be out on this particular trade. But you don't know that before you're going to get in. It's just like on the other two trades. You don't know which trades are really going to move and run until they start to play themselves out. One thing I want to show on this particular trade too is on the weekly chart, if I scroll out here, one of the reasons I like this trade, and we got in where we did right at this point, where it took out a previous low, is I go over here to the left and I see all these green candles over here to the left. There's no support on the weekly chart until 82.93. That's about another 400 pips, roughly, of room to run. Now, will the pair move that far and will I make that many pips on the trade? I have no idea. All I know is by looking at this weekly chart, it's a higher probability trade because it's got more room to run. And this is true on the weekly charts of some of the other pairs that we were talking about as well. So I always like to check the weekly to see how much room a pair has to run to determine whether or not it's worth my while to get into that trade. Okay, we're running out of time here, but I just wanted to do something a little bit different, do that reverse engineering bit a little bit to, instead of looking forward, how we might enter a trade as price action moves going forward, I just wanted to go backward in time a little bit and show you why I'm in the trades I'm in and how I got there. So thanks again for being here, and please feel free to email me with any questions that you might have at RKrivoFX@gmail.com. Thanks again. Bye now.